Good morning. My name is Jim Cagnina with Infinity Futures. Could everybody hear me? One last sound check. You're going to see a website up here you can hear now. Awesome. All right, let's get started here. This is unbelievable. We've had some great trading opportunities here the last several days. I want to get right into it, but let's start out with the basic stuff here. Trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes you have a high combination of leverage and volatility, which we certainly do today. That could be an equation for opportunity as well as risk, so be careful. Only fund your futures trading account with risk capital. My personal definition: money I could afford to lose doesn't change my lifestyle or my retirement horizon. That's my personal definition. Everybody's unique and different. We get that here at Infinity. So feel free to reach out to any of our customer service reps here or myself. Again, my name is Jim Cagnina. Be happy to talk to you about risk capital and what you might be getting into here by day trading the futures markets. I'll put up my contact information here in a second. Past performance not indicative of future results. So anything that anybody tells you, including me, about the possibility of success on a trade could change day to day. The paradigm of the market always changes. Any questions on risk, type them in. Everybody who's saying good morning to me, I really, really appreciate it. We have a big crowd today, and I'll try to stop and answer questions the best that I can. A couple other housekeeping things here. If you go to the homepage on Infinity, infinityfutures.com, and you want to follow along live with the real-time practice account with the charts or with the trading platform, go ahead and just click on the Learn More button. And if you haven't already, fill out this practice account form on the right-hand side. You're going to get an immediate email with a username and a password and a download link, and you can get started right away. It's real-time, free for 30 days. Videos, how-to videos on our YouTube channel. Just go all the way to the bottom of the webpage. There's a little YouTube icon at the bottom. Click on that. It'll take you to the YouTube channel, I guess they're called. YouTube channel, yeah. And we have a bunch of different playlists with information on how to use the platforms and recordings of webinars and stuff like that. I apologize, I'm talking so fast. I'm very excited about today. We got a great market today. All right, any questions on any of that stuff, let me know. Yes, this is going to be recorded, and if all goes well, it will be posted on our YouTube channel later on today. All right, let's get rid of that web page here, and let's get back to it. So today is like, this whole idea with the way we've developed these new charts is, simplify your charts, simplify your life. And we've made these things so intuitive and easy, yet powerful enough to really do some pretty good analysis, that I wanted to share some things that I've seen over the last, month or so in these markets. So let's start, though, by doing kind of a big overview of what's going on. And we're going to talk about the E-mini S&P market. This is really, we're back to the golden era of E-mini S&P trading. I mean, I don't know if you remember 20 years ago when this thing all started, but we have an incredible amount of volume, incredible amount of notional value being traded right now, and we have environments in the United States anyway, or in the globe, I should say, of some incredible things that are generating volatility, which is price action, which presents trading ideas and opportunities. So that's what we're going to talk about today. I'm just going to add a volume chart here just to kind of give you a little bit of a peek. This is a daily, historic, daily E-mini S&P candle chart. And I got some lines drawn on it. I'll talk to you about the lines in a second. But if you look at the volume I just put on here, these histograms at the bottom, we are over, I have a 1.75 million line. That's where I kind of draw the line. It's like, all right, do we have a high volume day or a regular volume day? And, we have periods of high volume days. Now we've had several in a row. But over the last, year and a half, it's been that way. And, that, again, remember my risk conversation, it's a double-edged sword, but the volume creates price action, and it creates volatility, and it creates opportunities. And so that's the first thing. The first good news is there's tons of stuff going on here in the E-mini S&P market, and it's 23 hours a day. It's not, there is micro E-minis are very valuable. I'm sorry, I'm interrupting for a question, but the micro E-minis are very liquid also. and they're in total sync with this with the big E-mini. I'll call it. It's kind of a oxymoron calling the E-mini big, but it's a big E-mini, right? And it's $50 times the price is the notional value. It's you have a lot of leverage trading these things, so be careful. In any event, here's a daily chart. Okay, and I have a couple of lines here. I like lines. I think they're good, and it's part psychological, part real. If you start with this yellow line here, I pretty much have more than a calendar year drawn here, but you could shrink and contrast with these little handy plus and minus buttons here. But I have old resistance times 3 is now the new support. Okay, so we have right here back in October 17th, we hit the 28.25 level, then again in November 8th, and then again in December 3rd. And to the casual eye, that's a triple top, right? Even though it came from a break, it's a triple top. It keeps bouncing off there and going down, bouncing off there, going down. That's the definition, right? And in the meantime, things have happened, and we've kind of been moved way down, and then broke back up, and then as of this week, or actually last week, we see that magic number appear again, 28.25. And Jack Bros will testify that some of these old points become important later on, and I think it does as well. So I drew that line there as a mark to say, okay, this now might be an interesting support level in general. Now it's pretty far away, especially after this morning's. Sorry, Ray, I'm going to slow down. I know, I'm so excited. I'm talking so fast. This morning we had some news, and we're going to talk about what different news means to different things. But that's why I drew that. That's why I drew that yellow line going across. Old support, new resistance. So far, we'll see what happens. The second thing you'll see on here is a fib line starting right here down, I don't know, what's the date here? Christmas of last year, all the way to the highs, recent highs at the end of July. And let me get rid of the crosshairs for a second. You could see the zeros at the top, 38.2% retracement on the year basically is right here, a little bit below my yellow line, and 50% is a little bit lower. So when I ask myself, what's the state of this market? Anybody who's been recently has been to any of my webinars, I've been bullish, right? We're in a bull market, we're in a bull market, we're in a bull market, and we really have been since 2008. But now we're in a period where we're consolidating a little bit. We had a sell-off for different reasons, which we'll talk about. And now we're right between that 0% and 38.2%, right? Anything could happen. We could keep rallying up and making new highs. We can come back down and test a 38.2%. So I'm a little bit cautious now, a little bit more cautious now when I say we're in a bull market. I would say we're neutral right now. We're waiting to see what's going to happen with several different factors. And some of those factors, as you can see, we have published news, right? Today we had CPI, which is a big deal, or it used to be a big deal anyway, but it still could be a big deal, and it could trigger not only an immediate price response at 7:30 in the morning Chicago time when it's released, but also generally set the trend, right? It's really a gauge of inflation. And just let me kind of pull this over here. This is where you get information on what CPI is. Right, and we talk about urban CPI mostly. CPI that's quoted is urban CPI, which is not rural, right? It's the opposite of rural. It's the consumers in cities, in major cities, in big cities. So that's kind of number one, where you could read all about it, and it talks about seasonal adjusting and stuff that will blow your head off. It's just too much information. But if you go ahead and look at Econoday, which is one of my favorite places to go, econoday.com, it'll show you, okay, it'll outline, and it'll say, listen, CPI month over month, prior was 0.1%, consensus is 0.2, consensus range is 0.2 to 0.4, and actual is 0.3. So it gives you it breaks it down pretty easily without having to read the crazy report that the Bureau puts out. And then year over year, we have the year over year, and then we have, of course, CPI less food and energy, which always struck me as odd because from a regular urban consumer, food and energy is what you consume. It should, mostly, right? Almost all the time, consistently on a regular basis. But anyway, so econoday.com calendar is a pretty good place to get some information. So this is news that we know is coming. This is news that is published in advance. This is information that we're bracing ourselves for. This is things that may or may not move the market, but we're ready for it, right? We know it's coming. And then the second category is unpublished, right? There's unpublished stuff which we were I wouldn't say a victim of today, but we were a beneficiary of today. And unpublished categories in my mind right now are tariffs. There's stuff going on in Hong Kong, which is a little scary. Brexit's coming up again and again and again, with maybe a hard stop here coming up soon. The peso in Argentina. Did I spell Argentina wrong? Maybe not. Is there an A or an E at the end? That's going on. That could affect global markets. The Euro banks are also there, and you probably have other things that you're looking at. The Straits of Hormuz, stuff like that could affect the markets. They're unpublished. We don't know what's going to happen when, but we know that there's a possibility of something that could happen, right? So that's the second thing you have to be aware of. Everybody is going to be watching, I don't know, your news channel on TV or your news feed on the internet, or your Twitter feed. These kind of information transfers almost immediate right now, so it's really good. And when you couple that with the Infinity AT trading ladder, which I'll pull up in a second, then you have the ability to be nimble and get in and out quickly. Okay, so overall, the punchline of this first chart is volatility is here. There's a lot of volume. There's a lot of opportunity. We have large average daily ranges, and you need to be careful, but you can get some good opportunities in there. All right, the second thing I wanted to focus on today is some combining a couple indicators in a real easy way, and I've done some stuff to make it a little bit easier to do that. And let me show you what I'm talking about. All right, I'm going to go to a 10-minute chart. This is a 10-minute E-mini September 2019 chart. Now it's a little funky because we had this giant rally today, right? On the open, and we're delaying tariffs till December or something like that. I haven't really read all about it because I was preparing for today, but there was that unexpected news that came up that caused this massive rally, this massive run-up, okay? And for those of you who were with me last webinar, you know that I'm really interested in this combination of the CCI, which I have at the bottom, the Commodity Channel Index, and a simple exponential moving average on a 10-minute chart. This is a six period EMA on the yellow. The blue is a 20 period EMA on the bottom, and we're looking for crosses, right? And one of the things I'm looking for is when the CCI crosses the zero line about the same time that we have this EMA cross. Okay, that's an interesting point for me. So what I did was we went ahead and talked to the developers at Transact, and these guys are they're geniuses. They're very smart. They're programmers. They're really good at what they do. And by the way, they're the guys that are responsible for our data feed and for everything that you're going to use when you trade with Infinity. But what I did was they had to make a study for me. It's called the CCI MA indicator, and I'm open for any kind of name you guys want me to rename it. It was going to be the Kaganator, but that way I couldn't have that written on everyone's chart. And this is under development. This is a new thing that's under development. I'm going to click on this, and what it does, it's going to give me a visual notification. Make sure everybody sees this. Audio, yeah, okay. Visual notification on every time my condition is true. Okay, and this isn't necessarily a signal to buy or sell yet. This isn't a signal to buy or sell yet, but it tells me, hey, the CCI crossed 100, and the moving average crossed within a couple of bars of each other. So I'm going to go ahead, when those conditions are met, I'm going to put a signal there, and I have a visual reminder. So everybody following me so far? Okay, so this gives me the ability now to remove lines from my charts to make it simpler. Okay, but I'm going to keep the CCI down here at the bottom because it's going to become important later on in our analysis. So we have a situation here where I know there was a EMA cross near here and a zero line cross on the CCI near here as well, here as well. And you could just visually see some of these would be good trade signals and some of these would be bad trade signals, right? Some would work and some wouldn't work. So you have to put some conditions on them. And one condition that I immediately decided to try was this thing called super trends. I'm going to go into studies and I'm going to go all the way down till I see something called super trends. Where is it? Here we go, super trends, and I'm just going to click on it, and it's going to put another indicator on there. Okay, and let me kind of make this a little bit better, easier for everybody to see by giving us some more room. And what does it? Actually, let me go back in time here so we can see the first time we got a super trend signal was yesterday at about 3 o'clock. Right here, follow my mouse, 3 o'clock, super trend kicks in. And you get this little red dot, right? You get this little red dot, or down arrow saying, hey, there's a bearish signal here on the super trend. There's a bearish signal here on the super trend. Now, while that bar is developing, if it's not developing really quickly, this will flash on or off, and it won't be permanent until the next bar. This won't be permanent till the next bar, right? So it's, you can see it flashing on and off for a while during the bar, but then it becomes permanent. Okay, boom. And lo and behold, the super trend signal pops up at the exact same time that my signal pops up, right? I got a red, I don't know if that's an arrow or what do you want to call it, but you got a little red thing saying, hey, the CCI in the moving average, exponential moving average, both crossed also. Aha. Okay, so this is interesting to me. Now we've got two things that actually confirm, right? We confirm. I don't have a lot of other stuff on here. I don't have anything else on here, actually, as a matter of fact. And it turned out to be this particular signal, and it doesn't work every time, but this particular signal turned out to be pretty good. If you would have taken it, you would have been okay. Now, this red line here is part of the super trend, and that's kind of an implied stop, right? This is what super trends, and you know what? If you retrace back to here, you should get out. This is an implied stop, and red is, of course, down or bearish. Green is the opposite. Okay, so that's kind of signal one. That one was good, and I liked it. Now I want to point out one other condition, which is also important. I'm going to bring my crosshairs down. If you go down to the CCI, let me actually pull it up so you can see it better. You could see that the CCI came from a state of 100 or better within the last couple of candles, and went all the way to past minus 100 within the next couple of candles. So this momentum and the magnitude of the CCI cross is also important, as we'll see later on when we look at other signals. So that's the third thing. What's the magnitude of change of the CCI? Did it go from 100 or higher cross, or do the opposite, minus 100 and cross? And that's what it did right here. So that's kind of the third thing that in my mind is like, okay, this might be good. Let's go ahead and move over to the next one, the next signal. Forget about the super trend for a second. We're short in the super trend, right? So already one out of the three has been violated. One of the three rules has been violated, right? But sure enough, we got the CCI and we've got the moving average cross here, signaling a green dot. And you go, okay, now is this another signal to go along? Well, let's take a look down at the CCI and see what we see. Well, 1, 2, 3 periods back, we're not negative 100. The velocity of this whole CCI is in a range. No good. This is not a good signal. The second one, I would argue also is not a good signal, even though you would have been okay if you would have taken it. But again, the CCI didn't meet the challenge here. So you can go through these things and look at each one and analyze. You know, here is at night. This is all in night, right? Right, and here's nighttime, and all these signals up, down, up, down, up, down have the magnitude of the CCI hasn't changed a lot. It hasn't gone from minus to plus and plus to minus 100, and it's nighttime, right? It's nighttime here, and we didn't get a lot of price action. We had a very small trading, relatively small trading range. Okay, so that's other thing to be careful at when you're looking at this kind of combination of oscillator and in moving average cross or anything, any kind of cross. Okay, is everybody with me so far? Now, one of the things to keep in mind, there's a couple things to keep in mind. One, this analysis is being done on a 10-minute E-mini S&P chart, not a 10-minute bond chart, not a 10-minute corn chart, and that analysis is different on those markets. I wouldn't use this in those markets. As a matter of fact, I've been testing them in these markets, and the signal is not as good. The Euro FX, the signal is looking pretty good. I'm still testing it, 6E. And the currency markets in the stock indices seem to be okay, seem to be good if you apply the rules properly. Okay, so that's important, and it's got to be on a 10-minute chart. All right. Now, your homework assignment, should you choose to accept it, is to get the Infinity AT charts, add these studies, and take a look at it and say, hey, Jim, the 6 and 20 EMA isn't as good as the 5 and 30, or isn't as good as the 8 and 35. Or, you know, so whatever combination or ideas you come up with, I would welcome with open arms, because we are going to filter the CCI MA indicator. This is our first social indicator. We're making a social indicator together. We're going to filter some of these signals out that don't cut the mustard. Okay, and I'm going to rely on you to go ahead and send me an email. Here, I'm going to put my email address in here so everyone has this. It's easy. This literally comes to me personally, and it comes to my cell phone, and it comes to my house. It comes all over the place. It's trade@infinityfutures.com. I'm going to send this to everybody. Trade@infinityfutures.com. All right, and again, my name is Jim Cagnina. For those of you who are new, we have a big group here today, so I don't know who's who. But moving sideways, okay, we have, what time? Okay, this is midnight. This is right after midnight. We have our first signal, which is close but no cigar, right? You could say, hey, we didn't come from a state of plus 100 through the zero line prior to this signal. However, the super trend is still negative, and within one more 10-minute candle, we broke down past minus 100, and we went pretty far actually over the next few bars. So in this particular case, one might wait actually a bar or so to see what happens, because we were pretty darn close here to 100, 2 bars previous. This signal is marginal, might be a good one. Well, it turned out to be a good one, right? But you know, we didn't know, but it did turn out to be a good one. Next one over. Again, it didn't really come from a state of minus 100 over the zero line, and it's contrary to the super trend, and it took a few more candles. It broke down the other way. So this one didn't work. And then let's take a look at 550 this morning. And I've done some back testing. In early morning, you do get good signals. Early morning, you do get good signals, but this one again didn't really meet the criteria. Sure enough, when we opened up here at 8:30, or 820, I guess this is. Let me expand this here a little bit better so everybody can see it a little bit better. With the new AT charts, dude, this is dude and dudettes. I mean, manipulating these charts is so easy and so intuitive. I can't tell you. I'm so happy we've come down this path and we're using this because this is awesome. You know, this was the Mac Daddy of signals, right? So we had the signal. Let me kind of make it even easier to see. Right here. Now, we didn't get a super trend confirmation in this candle, right? So we could be a little skeptical. We didn't go from minus 100 to 0. We could be a little skeptical. It was 10 minutes before the open. You could be a lot of skeptical. A CPI number came out recently, which we've already assimilated in the market, and that could be telling us something. Well, then the very next candle, sure enough, we get the super trend confirmation, and it's off to the races, right? There's an announcement on tariffs. Maybe I'm not sure the timing of the announcement within this 10-minute bar, because again, I was setting up charts. I wasn't looking at the news. So sure enough, we're off to the races. We have confirmation. We're well above the 100 level on the CCI, and if you were brave enough to go along, you had a lot of upside here. If you were brave enough to go short, well, then it didn't work out so good. So Ken asks, this is a good question, and this is why I'm either at advantage or disadvantage to the whole rest of the world. Ken asks, where did you see the tariffs announcement? I had like an office full of brokers shout it out loud. That's how I heard. I didn't see anything. That's how I heard, because I got an office full of people that are, you know, that are engaged in this effort, and that's one of the reasons, Ken, why I say Infinity is a better brokerage firm than in other places, because you have, you know, our customer service reps are engaged with what the market's doing, and they're interacting with customers and traders all day long, 10 hours a day, give or take. So anyway, that's a sidetrack. That was a little plug for Infinity, but that's how I heard. Who asked about the red line? Okay, so Pete, the red line is where Supertrend says get out. This is kind of like your stop line. You should be getting out if you breach the red line and you actually took the trade and you excuse me, and you went short back here yesterday at 3. This is your guide to when Supertrend says, hey, this is where you should put your stop. It's personal preference. It's something that you have to decide what you're going to do. Today at 8:30, if you took the signal at 8:30, the thing to do, in my opinion, was what Dan Grams had taught me many years ago, and that was when you do a 2-unit trade, right? You're going to do a 2-unit trade. Just pick a number, and you're gonna put a stop in, and I'm just gonna put a random stop in for now. I'm not gonna do anything too incredibly detailed right now. We'll put a random stop in, and then I'm gonna take one of the contracts off the table at a certain profit target, right? And once that happens, let's move it a little closer so maybe we'll get lucky. Then I'm going to have profit on one contract, and then I'm still going to be long one, right? I'm still going to be plus one because I started with 2. I took 1 off. I'm still going to be plus 1, and then I change my stop to a 1 lot and move it to break even plus a tick. That strategy on a trend like this, on a huge trend like this, is good because you lock in a certain amount of goodness, I'll call it, of profit on a move, And then the second unit is kind of risk-free, right? You have a stop in, and the stop is at the exchange. It's not sitting on my computer here. This is a sim account, by the way, guys. But if it was a live account, it would be at the exchange, and I'd be protected. I'd have some protection, and you could have some slippage. But the S&P is so deep and heavy that's on a 1 and 2 lot, that's going to be a unique case. So anyway, that type of trade strategy here this morning would have paid off because we rocketed it up, really rocketed it up, and you could pull up a 1 minute chart and really see how that panned out. I'm just going to flatten everything out and get that out of the way. All right, so alternatively, who asked about the red line? So alternatively, the green line is where you'd put your stop. If you took your super trend signal here, is where you would put your stop, your sell stop, because you're long. You would be long right now. That's what that green line is supposed to be, right? That's what the green line is supposed to be. So that's the gist of it. It's not. Just like anything else in life, there's more of an art than a science. But by combining a couple of simple things, it could help you reaffirm what your muscle memory thinks would be good, right? If you look at these things long enough, you have a feeling for how the market moves and how the things go, and that extra instinct that you have could also help confirm whether or not you wanted to go long this morning or not. Carlos, I'm not sure what you mean. He says interpretation otherwise consistently will be completely absent, in my humble opinion. What do you mean by that? Expand on that. That's a very interesting comment. Oh, wait, I missed the top part. I think we need to add a thesis, context, and HTF structural interpretation. Well, yeah, I mean the structural interpretation, in my opinion, was that daily chart I said, and the market has just come from a very bullish environment to maybe a neutral, retracement environment, and so I'm not automatically bullish or not automatically looking for places to buy, and I'm not automatically looking for places to sell. I'm looking for places to get in. But I hear what you're saying. I do, and then that's just the way I do it, Carlos. I mean, other people have very strict rules on how they decide bullish, bearish, neutral, action, inaction. Very strict rules, very complicated rules. I'm different. I'm pretty much. I'm pretty much. So I'm a simple kind of guy. Let's scroll back up through some of these questions here. Can you manipulate the order from the chart? This is a great question. Who is this? Karine. I'm not sure if I pronounce your name wrong. Take it as a badge of courage. All right, so I'm going to go ahead and I'm just going to place a random trade here. I'm just going to go ahead and do something random. Oops, see, I made a mistake. Enter a quantity. Quick click, I'm going to put there. I'll put a 1 on there. I'll buy 1 at the market. Okay, so we're long 1 and then my simulator at 29.25 and a quarter. Right, we're long there. And I'm going to go ahead and just move this out of the way. Now, the question that Carmen asked is, hey, Jim, can you now implement trade management from the chart itself? And of course you can. There's this little yin yang button here, or arrow up, arrow down button here. You hover your mouse over it, it says trade. I'm going to go ahead and click on that. Oops, click like a man, Jim. All right, click on that, and I get this little sidebar that pops up that enables you to do things like I just said. So let's, for instance, start with just basic order management here. If I wanted to actually place a limit order, I could go ahead and do that. I could place a limit order, and there it is. It's right there. If I wanted to cancel a limit order, I can go ahead and cancel this limit order. All right, let me just refresh this really fast here for a second. Bear with me here. Since they are web-based charts, refreshing works, right? Refreshing works. And placing a sell order is the exact opposite. There it is, there's the flag, there it is, and you could right click. You could change it, you could do whatever you want. Market order, same thing, you could do that as well. And then there's positions and stuff like that that you could toggle back and forth. Okay, let's go ahead and get rid of that. All right, let me go back here through some questions. All right, Melanie asks, where is the CCI 20, the one you have on the bottom of the chart? Okay, so if you just want to add it, you go to Studies, and you're going to scroll down to, it's called Commodity Channel Index, right? And the CCI is short. You click on Commodity Channel Index, and it will go ahead and add it to the charts. And, you know, the default is 20, right? So there's a little cog here, right? On the lower left, you click on the cog, and you could change the setting. You could change the period from 20 to something else, but 20 is the classic number that people use. You could change the color and shading, and you could change the overbought zones and the oversold zones and experiment to your heart's content. And maybe that's one of the experiments that you might want to conduct when you're looking at the EMA. Should it be 6, or should it be 20, or should it be 8, or should it be 25? You know, the CCI, you could also play with these overbought levels, these oversold levels, and the periods. I hope that if I'm not answering your question properly, just type it in again, and I'll try to think harder. So the settings, John, I just showed you. I'll show you the settings for Super Trend. 7.3, again, it's what comes out of the box. The 7.3 is out of the box. Again, you can experiment with those as well, right? And I'll warn you, though, the Super Trend signal doesn't come up very often, right? Maybe once a day, you know, and sometimes in the middle of the night. But while you're in that trend, while it's identified that trend as red, and you get a signal to go short, it might be okay. It might be okay. Aubrey, this does work on a micro. Absolutely. I mean, you know, we could just change it real fast. M-E, oops, M as in micro, E mini, S. And you'll see it looks almost identical. And remember, it's the same contract really, except it's smaller. There's pretty good volume in it, and the arbitrage between the two contracts are pretty intense, which means the pricing is the same. So yeah, that's how you do it with the micro. It's pretty easy. The Dow E-mini, you know, this is a good, and I want to clarify. So Joe asked, does this work on the Dow E-mini? When you say does it work, really what I want to, the point I want to get across is these are a couple indicators that you could use in your decision-making process that could help reinforce a trade idea. This isn't a signal like, oh, you know what, I'm going to go ahead and I'm going to go long because the signal says to go long. You know, there's criteria we talked about. You know, the CCI crossing, the time of day, stuff like that. Is Super Trend the same way? So I just want to clarify that. But yeah, so it's pretty easy to add. So that's my settings for the Super Trend. Can I rewatch this video? Melaine, absolutely. We're going to put it on YouTube. I'll make a note that you need an email. Letting you know. It takes a while. I mean, it takes a few hours. So don't send me an email at 11 o'clock and say, hey, Jim, where's the video? Where's the video you promised us? I promise we'll get it up. It's just going to, you know, it's got to be rendered and go through a process and uploaded by somebody other than me. And Skip says, I don't see Super Trend on my tool menu. I'm assuming you're using the Infinity AT charts here that we're looking at? Because if you are, and you go to studies, it will be there. If you're using some other charting software, I don't know if you have it on there or not, but you do get it with the Infinity AT trading platform. And if you don't, something really weird's going on, because everyone has the same software that I got, the same web-based charts that I have. Do you see it yet, Skip? I'm a little concerned for Skip. Huh. That's very unusual. Try to hit your refresh button and see if anything clears up. If not, let's get together after the webinar and we'll do some diagnostic analysis here. Because there really is no old version of this. This version is updated on the fly constantly. It's not like some of the other software vendors where you got version 72, version 73, version 74, and you got to do a bunch of new installs. Make sure that those new installs are compatible with your PC. You don't have to do that with this. This is automatic. Okay, the MMA settings, let's go over them again. They are, I'll actually apply them to the chart again. So the moving average settings for the CCIMA is, so the fast one is 6 period, again, 10-minute chart, 6 period, field on close, exponential, and I'm going to call it yellow. You can call it whatever you want, and hit done. Okay, that's the first one. The second one is moving average 20. This is the slow one. It's not really slow, but it's slow, and it's going to be exponential. And we're going to color that, I don't know, light blue, because I got a black background, so I got to make sure it shows up. And that's it. And the reason I hid them before I deleted them is because it's built into these little dots that I have put there. But that's what it is. It's 6 and 20. EMA, not simple, but EMA. And just so you know, here's another thing you could experiment with if you decide you have a better version of this than I do, which is very possible. Because I'm not the smartest guy in the room by a mile. But you have other types of moving averages, triple, double, whole, Wells Wild, weighted. There's a lot of little hidden gems in this software, in these charts that make them more powerful than you think they are. Right? They're more powerful than you think they are. The way that the architecture of this thing puts a lot of information in really readily accessible areas. You could pull it up and change things. That's the cool thing about it. Is I discover stuff new all the time, actually. I mean, we're so new, literally. All right, hang on a second here. Let me open up the question box here. We have a couple more good ones. Melanie says, I have to reinstall the chart each time I want to use it. Yeah, so there's a way to save these studies, right? So if you want to save it, they used to be called chart books, right? We're just calling these views. And all you're going to do is once you have your chart completed how you want it, you're going to click on Save Plus, and I'll just call this one CAGS Test 2, and save it. And so now my view is saved, right? And so if I log off, I log back in the next day, whenever it is, these are saved server side, so you could pull them back up however you'd like. That should work universally for everybody. So there's really nothing to install, right? And you shouldn't have to recreate all of your stuff. It should be a way to save them. There is a way to save one and pull it right up like that. Oh, boy. Dick, this is a great question. Could you hide the bullet pointers on the price scale side? You're talking about the this and that, right? So we're universally working on that. So what he means is, can you hide? I don't think it's here yet. Can you hide? What just happened? I just did it. I just did it. Did you see what I did? I just hit it. If you want to unhide it, you put default. You want to hide it, you put none. I answered my own question. Okay, so the blue again is the 20 period exponential moving average. Yeah, but again, you don't have to put the moving averages up if you're using the CCIMI study. So Tom, the crossover circle signals, it's a study called CCIMA indicator. Let's get rid of that. I'm going to take it off. I'm going to put it on again. It'll be in your main, it says new, CCIMA indicator. It's brand new, as a matter of fact. The guys at Transact made this for me for this presentation, and it's awesome. And there it is. It's awesome if I do say so myself. Oh, God. All right, so let's go ahead and unclutter this thing, and let's just get rid of the MMAs. You don't need them anymore. Okay, so let me scroll up. I'm sure I missed a few questions. See, I haven't tested this on crude oil, to be honest with you. I don't know. You know, CL, what are we in? Are we in September? Crude oil. So, I mean, you could take a look to see if the same rules apply on crude oil. I mean, we have, you know, this morning's signal was this morning's signal. It was unique and it was powerful. And some of the other signals might seem like a bust, but I would go through them and take a look using the same rules. Is the velocity from CCI minus 100 crossing the zero or positive 100 crossing the zero? Or if it's somewhat subdued, is the super trend the same way? Things like that. So I don't know about that, but you know, I've been looking at NQ, which is a really great market for trading the micros as well as the big ones, because it does move a lot and it's easy to scale into positions. And with you know, the transaction costs, it's really a good market to trade if you're trading with us. But in any event, that's kind of where we're at. Let's see. We talked about what that was. We talked about what that was. We talked about that. Bear with me while I'm scrolling through the questions. I want to make sure I got everyone's question. Ron wants to know, is there a way to have your room full of brokers send out an alert? Unfortunately not. Unfortunately not. So, you know, as these things progress and we develop more and more of these webinars and we develop more and more of these special tools, these combination tools on the chart, it should give folks a little bit of an advantage, a little bit of heads up of what's going on. Saying it back to this. Okay, the site I was looking at was called, I'm going to send this, it's called econoday.com. Econo, I'm going to type it in here to the bottom. Econo, I'm going to send it to all. It's econoday.com. You can get CME has an economic calendar as an example that's similar. But Econoday kind of started it all. Let me show you what it looks like just from the home page. This kind of started it all. So if you go to the econoday.com, you have upcoming U.S. announcements and upcoming global announcements. And this isn't something you should take for granted, the global announcements, if you want to see those. But let's just take a look at the view calendar for the week, and it has Monday, Tuesday, Wednesday, Thursday, Friday. You can change your views to daily or monthly or whatever you want to do, but it has a list of things that they feel are important from a release point of view. And so, you know, we had CPI today, Redbook, and then some treasury bill auction announcements coming up. So if you're trading interest rate products, those might be of interest to you also. And if you click on any given topic, it will show you, what the economic consensus is and what the actual number is, along with a little highlight description. Very useful. It's a free site. You just go to it. It's pretty good. You might be able to pay for alerts and stuff like that. Tomorrow we have import-export prices at 8:30 East Coast time, in the EIA weekly petroleum status report for crude oil traders. That's a big one. That's a big one. And then you could even click on the actual upcoming release, and it will tell you what the consensus is. Now, obviously, we don't know what the number is because it hasn't been released yet, but it tells you what the consensus is. And you could help, decide on strategy then. Okay, so that's Econo Day. I'm going to get rid of Econo Day. So hopefully that's helpful. But again, the CME group has a great economic calendar on it. I think you can get the CME groups through our website as well. Thank you, Tom. Appreciate that. Can you manipulate the order from charts? We already went through that. Mark Rose says, yeah. Okay, so Philip, thanks for that. I will. Here's the deal. If you're not, what I would do if I were you, and again, I can't tell you what to do, but if you go to our YouTube channel and you subscribe to our YouTube channel, I believe that when I post a new video, you get a notification somehow that says, hey, Jim posted a new video on YouTube. That's kind of one way to get instant updates. I think you put your email address in. I think you got to liberate your email address to YouTube, but that's one way to do it. The second thing is, this isn't the last time I'm going to do a webinar on this stuff. So when we do a substantial change, I expect to, every week we're releasing new things and we're talking about new ideas. I'll address it. And I'm a little hesitant to send out an email to the database. Everybody gets mad when I send too many emails out, and I don't blame you. I get tons of emails also, and it drives me crazy. So I want to be careful on how we do that. Ursa, yes to OCOs. We'll do a whole another trading one another time. I'm not gonna. We're what time is it now? We're probably, yeah, we're getting close to being an hour. We'll do a whole trading one at another time. Yes, you could. And there are some trading videos on our actual YouTube channel. Steve, the bracket orders on the yin yang button are not our work in progress. They will be there. Hang tight. The whole trading functionality on the yin yang bracket is going to be kicked into high gear. So you got to be patient. But right now, the thing to know is, you're on a cell phone, or you're on a Macintosh, you're on a tablet, or a smartphone or whatever it is, iPhone. You'll be able to manage positions if you have to. If you're not at your PC, if you're not on a Mac, or you will be able to. You could create positions too. But more importantly, you are busy. You're on the fly. You're doing things. Most likely, you have a cell phone in your pocket. I think like the whole world does, more or less. And you have that access. You have that immediate ability, and everything's in sync. What you see on one, you'll see on the other. Completely fungible. I used the word fungible the other day, and people were like, is that a word? I don't know if it's a word, but it makes sense. Fungible. It's together. Skip, I'm going to get with you one-on-one. We're going to figure out what's going on. Yeah, tick charts are here. Here are the settings on tick charts that are defaulted into, by popular opinion, defaulted into the charts. I haven't tried the signal on the tick chart yet, but give it a try. I'm all for it. All right, you says, I came a little late. What were the two moving averages? Oh no, not again. You got it, 6 and 20 EMA. You got that exactly right. 6 and 20 EMA. You is exactly right. I'm pronouncing your name wrong. I apologize. I'll call you Mr. Lim. I'm sure I got that part right. Arby says, does the signal happen on cross of the super trend or bar close? Well, whenever moving averages cross or a CCI crosses, it could happen in the middle of a bar. It doesn't have to happen. It doesn't only happen at a close of a bar. Those things happen. Those criteria hit could happen more, and they almost always do, in the middle of a bar while the candle's forming. In the super trend, you could see it will form in the middle of the bar also, and it'll blink on and off. It'll blink on and off, and then when the next bar hits, the signal is cemented in stone. But you could see it forming. You could see it about to happen. So you could front run it, but you got to be careful and make sure all of the other criteria are in place before you front run it. Again, this is my opinion. Past performance not indicative of future results. These are just observations that I've acquired over time, and I'm old, and I've had a lot of time to acquire information, most of it of which I've forgotten. All right, Al asks, why are some of the periods in the CCI filled gray? The gray area is when the CCI, here, let me kind of expand it here. This gray area just is telling me, hey, Jim, the CCI is over 100, or hey, Jim, the CCI is below minus 100. Again, this is oversold in theory, and this is overbought in theory. We don't use the CCI that way, but that's the idea. So this gray part just is kind of giving me a visual clue. Hey, this is up here now. We're over 100. We went from somewhere to over 100. It's important. And then when it trails down, it turns to black again when we get less than 100. So that shading just signifies that, and it's a visual clue. It just helps out. Bob asks, is there a way to see which futures month has the most volume? And I know exactly where you're coming from, and I'm going to show you a tip. The answer is yes, and I go to the scoreboard, the famous Infinity AT scoreboard, which is a quote board, really. I don't know why it got called a scoreboard, but it did. And let's take crude oil right here. We're in crude oil at October. Let's add some more crude oil months. Let's add. I'm going to scroll down, and I'm going to add. No, I don't want to add that one. I want to add a couple out months here, and I'm going to bring it up to the top. The front month, you want to know where the volume is, right? The most liquid volume. Let me add another crude oil month. I'll add December. And I'm going to move that up to the top. So at the very top, I have October, November, December crude oil. And if you go all the way over to the volume, you'll see I have 483,000 for the first one, 142,000 for the second one, and only 55,000 for the third one. That tells me that not knowing when rollover is or anything like that, or first notice day, if I don't know any of that stuff, I look at this and I could see where the volume is. And clearly the volume, the front month here is where the volume is right now in crude oil. That's a trick I use with the trading ladder. You can go to the CME website also and find the same information, but that's just a real shortcut. Let's see. Okay, there's a way to see futures. Okay. Ron, I would look at the equation for the super trend. I don't have it pulled up to show, and I might not be smart enough to understand the equation, but you could pull that up on Google, and I'll tell you what it is. Randy, that's coming. It's coming next. Joseph suggests tradingeconomics.com calendar, tradingeconomics.com. Yeah, we can trade from these. We already went over that. No, I'm not drunk yet. Thank you for making that comment. I'm just overly excited today. This is literally the golden age of trading E-minis is back. I'm so excited. We talked about crude oil, Forex Factory, another calendar. Yep. Bob, I think we just covered your question. Vince, if you're using, let's get the tech support guys to make sure your computer's set up right, Vince. That's a one-on-one question. We can work on that. Lawrence asked a great question. Lawrence asks, could the signals that we just talked about be incorporated into an auto trade? The answer is yes. They can be incorporated in the auto trade, and somebody's going to do it. Somebody with some programming skills that are better than mine, and mine are to zero. So anybody, the answer is yes, and we have an interface to allow that. So if you would like to try, or you know somebody who would like to try, let me know, and that for sure could happen. Skip, we're gonna go one-on-one with you. Yeah, so that's what we were talking about with the web-based things. I mean, say you had a dentist appointment today, and you had a trade on, and you're in the dentist waiting room, about to have your teeth worked on. You're eagerly anticipating the dentist chair. You'll have your phone in your hand, and you will be able to see quotes and charts and positions and P&L and all that stuff. Steve, thank you for that. I appreciate that. Howard, I do not believe SuperTrend is unique is unique. No. Let's see. Skip, you gave me the phone number here. I'm writing that thing down. I'm not going to tell the whole room because you'll have all these guys calling you, and that would not be good. Thank you for that, Skip. Yes, they are web-based. And again, let me show you again how to get the 30-day practice count. Just all you got to do, you're going to go to Infinity homepage, click learn more, fill this form out, and then you will immediately, like within I don't know, anywhere from 5 seconds to a minute, get an email with a username, a password, and a download link. And when you log in for the first time, a chart will open, the quote board will open, and you're off to the races. And hopefully you'll enjoy these as much as we do. All right, so let's see. Let's stick to the topic here, guys, today. Philip, you're welcome. You should follow whoever you want on Twitter feeds. I'm not going to recommend anybody in particular. Oh, boy. Karen, actually, tick trend, advanced decliners. Great question. Karen asks, tick trend. I'm going to get myself in trouble by answering this question. I'm going to get myself in trouble, but I'm going to do it anyway. Is tick trend, advanced decliners, market eternals available on the software? And my hope and prayer, the programmer guys are great, and they can't give me hard dates, but you might see something on Friday. Very close to that. It's in beta testing right now, Karen, and yeah, we are excited and proud to be able to get that on there. And the second that those are available, I'm going to do another webinar on tick trend and advanced decliners, even though I don't know how to use them, but I'll figure it out between now and the next webinar. Okay, Lawrence, thank you. So Bob asked, where did you access the screen showing the volume? Bob, do you mean on the chart itself? It's a study. So if you go to study, you have two options. You have volume underlay, you have volume profile also, but or volume chart. I'm going to click on volume chart. I know it's kind of weird, and it'll pull up at the bottom a histogram. if you want the histogram to be at the top on the lower left here where I'm wiggling my mouse, you just click that arrow up there and it'll bring it up. If you want to bring it up again, click it again and it'll bring it up. Or if you want to bring it down. Is that what you mean? I'm not sure if that's what your question is. Okay, so Jay, to access, you're going to have a separate login to access the charts from a mobile device. Your customer service rep could send you with that link, and your credentials will be the same, and you're going to log in and be good to go. If you're a live customer, then you go to the portal, log in, click launch charts. So it depends on if you're demoing it or if you're live, but it's basically you're going to a unique URL. Okay. Charles, we're going to do a whole trading from the charts event. It's easy to do with the yin and yang button. But we're not going to do it today. We're out of time, and there's a lot of stuff there. Michael, thank you. Yeah, Aubrey, there is Skype access, actually. All right, so here's the thing on Skype. You could reach your customer service rep on Skype. And the naming convention is, so I'm going to type mine in just so it's INF dot first name, my name's Jim, dot Cagnina. So INF dot first name dot last name, that's the Skype handle for the Infinity representatives. So Aubrey, find out, you know your guy's name or your gal's name, use that. You'll be able to find them, and they'll be happy to help you via Skype. All right, I think we chewed up our hour. We went through some stuff. We had some fun. Again, your homework assignment, come up with better parameters than I have. I dare you. I double dog dare you. And we'll keep this conversation moving forward. Try the charts if you haven't already. Anything we could do to help, reach out and ask us. We'll be happy to give it a try. Remember, trading futures, option and odds futures involves substantial risk of loss, not suitable for all traders and investors. Be careful out there, guys. Risk capital only. Trading futures is hard to do. Hope that helps. If you're having any one-on-one individualized issues or questions, reach out to your customer service rep. Like Skip just did, and we'll be happy to sit down with you on the phone and work it out. That's what our guys are here for, guys. And I say guys, it's universal, guys, gals. I'm going to it's unisex when I say guys, so don't yell at me for saying guys. Hope that helps everybody. Thank you for all the kind comments. Take care out there.